Good morning. I'm not a Wall Street analyst. My name is Jack Miller. I'm a CPA. My office is in Coconut Creek, Florida. I'm here to talk to you today about strategies for investment that make sense, keeping in mind the tax code. First of all, my advice to you is don't panic. So, after you take a deep breath and the stock market has gone down about 500 points, what do? First of all, I would recognize what the tax law is, which is that you're limited to $3,000 in losses per year. Now, you cannot offset these capital losses against ordinary income, so it doesn't make sense to sell off your portfolio and accumulate $100, $200, $300,000 in losses that you can't use for many, many years to come. You can, however, recognize gain on certain assets that you've held long term and offset these against the short term losses. But just to sell stocks to accumulate losses does not make sense. So if you're fortunate enough to have gains this year, what are your tax rates? Right now they're at historically low levels, ranging from 0% up to 20%. We may never see these rates again, so if you do have long-term capital gains, you want to realize this is a very good year to do it. However, if you do have losses that can offset it, as we just discussed, you can offset those losses against these long-term capital gains and you won't pay any tax. Again, the most important thing is to not panic, to know what the current tax law is, and to talk with your tax advisor and your financial planner before you make any decisions. Many people use online brokers firms. They don't speak with anybody. They make rash decisions. A month, 2 months later, they regret the decisions that they made. So act wisely.